Hey guys, it's Alongo here. And let's be real for a second. How many times have you put off investing because you thought you needed more money saved up, or you were waiting for the right time in the market? We've all been there. But the truth is, delaying your investments can seriously set you back financially. It's like putting off going to the gym. The longer you wait, the harder it gets, and the further you are from your goals. So, in this video, we're going to break down the real cost of waiting, and more importantly, I'm going to show you how to get started today, even if you can only invest a few bucks. Trust me, this is going to pay off big time. Let's get into it. Alright, let's talk about compounding. It's seriously the closest thing to magic you'll find in finance, and it's the key to building wealth over the long term. Imagine this. You start investing just $100 a month at age 25, and let's say you get an average return of 7% per year, which is totally doable in the market. Now, fast forward 40 years to retirement, that time when you want to be sipping mojitos on a beach somewhere. That measly $100 a month, thanks to compounding, would have grown to over $345,000. That's the power of starting early. But now, let's say you wait just 10 years to start investing. Same $100 a month, same 7% return, but you're starting at 35. Guess what? At retirement, you'd have about $122,000. That's a massive difference of over $223,000, and it's all because of those 10 years you missed out on letting your money compound. See, time is your biggest asset when it comes to investing, so the sooner you start, the more that money snowballs, making you more money without you lifting a finger. Now, let's talk about opportunity cost. This is a fancy way of saying that every dollar you don't invest is a dollar that's not out there working for you in the market. It's like leaving $100 on the sidewalk. You're just missing out on potential gains. Think about it, the stock market, even with its ups and downs, has historically gone up over the long term. By not investing, you're essentially sitting on the sidelines while everyone else is getting in on those gains. The good news is, you don't need a ton of money to get started. Even if you can only swing $50 or $100 a month right now, that's totally fine. The most important thing is to just start. As you earn more money, you can always increase those contributions. The key is to be consistent, and over time, those small amounts add up to serious wealth. Remember, the best time to plant a tree was 20 years ago, but the second best time is today. Let's be real. Keeping all your money in a savings account might feel safe, but it's actually losing you money in the long run. Why? 2 words: inflation. Inflation is like a sneaky tax that slowly eats away at the value of your money over time. Think about it. What cost $5 10 years ago probably costs a lot more now, right? That's inflation in action. So while you're getting a measly 0.5% interest on that savings account, inflation is running at, say, 3%, you're actually losing ground. That's why it's crucial to put your money to work in investments that have the potential to outpace inflation. Stocks, real estate, even things like index funds and ETFs. These are all assets that historically have grown at a rate higher than inflation, meaning your money is actually growing in value over time. Okay, so you're ready to start investing, but you're not sure where to put your money? Don't worry, it doesn't need to be complicated. For beginners, I always recommend starting with index funds or ETFs. And here's why. They're super simple, low cost, and offer instant diversification. Think of an index fund like a basket of stocks that tracks a specific market index, like the S&P 500, which includes 500 of the largest publicly traded U.S. companies. When you invest in an S&P 500 index fund, you're essentially buying a tiny piece of all those companies. This diversification is key because it spreads your risk across different industries and companies, so if one stock tanks, it doesn't tank your entire portfolio. Plus, index funds and ETFs typically have super low fees compared to actively managed funds, which can eat into your returns. One of the best things you can do for your financial life is to automate your investments. This means setting up a system where a certain amount of money is automatically transferred from your checking account to your investment account every month, week, or even paycheck. Trust me, this is a game changer. Automation takes the emotion out of investing. You're not tempted to skip a contribution because you want to buy the latest gadget or because the market is down. It just happens, consistently building your wealth over time without you having to think about it. And here's a pro tip. A lot of robo-advisors like Betterment or Wealthfront can actually automate this entire process for you. They'll ask you about your financial goals, risk tolerance, and then build and manage a diversified portfolio based on your needs. It's like having a personal financial advisor on autopilot. Here's the thing, there's never going to be a perfect time to invest. The market is constantly fluctuating, and trying to time it perfectly is like trying to predict the lottery. It's just not going to happen consistently. I've seen so many people get caught up in waiting for the market to bottom out or waiting for some magical sign, and you know what? They miss out on potential gains while they're waiting. Remember, time in the market is way more important than timing the market. The sooner you start investing, the sooner you can start benefiting from the power of compounding and long-term market growth. So my advice, don't try to be a fortune teller. Invest consistently, ignore the short-term noise, and focus on the long game. The world of investing is constantly evolving, so it's essential to make learning a continuous process. The more you know about different investment options, risks, and strategies, the better equipped you'll be to make informed decisions about your money. A great place to start is by reading books. One of my all-time favorites is The Intelligent Investor by Benjamin Graham. It's basically the Bible of value investing. There are also tons of fantastic podcasts out there that break down complex financial topics into easy-to-understand language. I highly recommend checking out the Bigger Pockets Money podcast. They have tons of actionable advice for building wealth. And hey, if you want more videos like this one, make sure to subscribe to my channel. Look, delaying investments can cost you years of potential growth and financial stability. But here's the good news. It's never too late to start. You don't need to be a millionaire or a financial expert to get started. Start small, even if it's just a few dollars a week. Be consistent, and let time work its magic on your money. So, my question for you is, what's stopping you from investing today? Let me know in the comments below, and if you found this video helpful, don't forget to give it a thumbs up, subscribe to the channel for more financial tips, and hit that bell icon to be notified when I post new videos. See you in the next one.